live in the virtual trading floor, the Pro Desk virtual trading floor. And let's get started with our disclosure. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here, got out of a couple of longs that I was in, got stopped out of Jumai, got stopped out of Neo, somehow didn't get stopped out of Facebook because it was so relatively strong, failed to put on any hedges today, which wasn't really what I was looking for, but the market kind of gave you the intraday signal that we needed to switch up and look for it, which I can discuss. But let's go over to our chart. So yeah, definitely not a good day here for this market to lose all of yesterday's price action. Yesterday was such a great continuation day off that pivot low from Friday that we were looking for and we discussed as a team. Really impressive upside action, closing at highs. And then today, we lost yesterday's low. We sold it very heavily. Somehow the SPYs managed to hold Friday's low for now. We kind of held in the last 5-10 minutes of the day that key 450 level for the SPYs that we discussed a lot actually on Friday last week. Kept discussing intraday the importance of SPY 450 and QQQ 360. So we did manage to hold those levels today. But yeah, it's not all sunshine and rainbows for the bulls. The bears really came in today and said, not so fast. Really strong upside move here like we had discussed. Here's your technical pullback into equilibrium, potential pivot point, good continuation off that yesterday, which we had called for. And then today, I did want to be a little bit more cautious on longs, just given yesterday's move. I think everyone knows, I don't like to chase a day two, but I was thinking maybe we could see money rotation come into energy stocks and some of the things that were strong yesterday would take a break. And that, by the way, would be a real hallmark of like bullish price action. We saw a lot of that last year when the overall bull market was still intact. We would see one sector go one day, and then it would get extended, and then it would take a pause, and then the next sector that was weaker that previous day would kind of catch up. That's kind of what I was looking for today. And we had even discussed off Felipe's thought process, and I agreed with him, not shorting right now. I think I said in the morning meeting today that I'm really only interested in starting to look for shorts if we break the pivot low that was placed in on Friday on the downside, because that tells you that bulls have lost that control, or if we are getting super extended to the upside again and then we can hedge like we've done a couple of times here in the past with success. So I didn't really have shorting on the brain today because of that big picture thought process. And what I failed to do was adjust to the price action as the price action provided us new information, because there was a real almost obvious opportunity, I think, to put some shorts on with the market, especially if you're someone like me who's got long swings on. Because I failed to do that, that actually is one of my worst P&L days I think I've had in quite some time, mainly because of my swings, I guess. But I got kind of smoked today, but I'm fine with it because I didn't do anything wrong. Maybe I could have done more things right, which would have been recognizing to put those shorts on intraday when we got the signal. But I didn't do anything technically wrong. I followed my game plans. I followed my risk management. I let myself get stopped out of Neo that I had yesterday. I let myself get stopped out of my remainder of Jumai that I had yesterday. Just totally following the game plan on those positions. And kind of just is what it is. It's a big down day today on a percentage basis. SPYs are down 1.25%, but Qs are down almost 2.25%, and the IWM is down 2.25%. So really big bear day. Just when I was starting to think this morning, Pat's note had noted that Gamma was back in positive territory, and I feel like I haven't seen that in a while. And that is something that bulls would want. What bulls want is they actually would want volatility to die down. Volatility and speed of movement usually increases in bearish type markets. And this year, from a volatility perspective, has just been insane. Totally insane. I've traded market environments where it's kind of rare to see the market finish up or down by over a percentage point for the major indices. And now finishing up or down by over a percentage point for this year has been more of the rule than the exception. And then you can have a day like today where the NASDAQ and the IWM, the Russell are down over 2% in one trading session. So we still have a lot of volatility. So the thought process that positive gamma could lead to contraction of volatility, which could lead to more bullish CTA fund flows and all that stuff coming back into the market is kind of out the window, I think for the moment. And the big question right now is, are we still able to hold Friday's low? Which so far today we did, but today's price action is definitely a win for the bulls. And I'm asking myself some questions here that I don't have answers to. We haven't broken this low from Friday, obviously, which is a good thing. But we did technically here make the beginning of a lower high. That's confirmed if we break Friday's low, which to me is looking like a larger probability. But as I look at all that and as I think about this further, I also ask myself, well, this move that we experienced here over this couple of weeks was just so insane. Going from 415 in the SPYs here to 462 in the SPYs in a very short period of time, and all we did was pull back from 462 to even today's low of 450. $12 pullback after a almost $50 upside move. It's still very small on a percentage basis of the pullback. We didn't even pull back to the 21 EMA. This price action over the last couple of days is actually letting this 21 EMA catch up further. It's tightening the spread a little bit between the 8 and 21 EMA. So those aren't necessarily bearish factors technically that is happening. And there is a situation here where we lose Friday's low, but it doesn't lead to a full bear breakdown. That's definitely one possibility, by the way, is that is what happens. We lose Friday's low. The bears were right. They gave that super max pain train to the upside. Again, Pat's note this morning was quoting that Morgan Stanley analyst. I don't remember his name off the top of my head, but he was definitely providing information and data and a thesis that was saying similar information to what we had already been saying, which was that this was just a bear market rally, a vicious bear market rally caused by market dynamics and technicals, and it's now over. And there are plenty of reasons why this market should work its way all the way back down. I think that the note from Morgan Stanley is talking about a move in SPYs to somewhere between $350 and $400, which would be obviously new lows on the year. We have Mike Wilson from Morgan Stanley. But he's been bearish for a long time, that guy. So I always take everything that analysts say with a grain of salt. Like I said in the morning meeting, when we discussed his note a little bit, it was, I agree with all the information that's in there, but the technicals just aren't confirming it. And if the technicals aren't confirming it, I don't care what his thesis is, because the technicals, especially after yesterday, were bullish. Certainly bullish. But we will see now. So here's our situation. Here's our potential situations. I actually think now, after today's price action, that we do not have a great probability of like tomorrow just immediately rallying back up, getting above yesterday's high, or today's high tomorrow, and then working our way back up to 460. We failed at that resistance. We came back down. Today was a pretty weak day. So I think that's a lower probability situation. Our other potential situations are just the break of Friday's low and then that full-on bear activity coming back in. Or the third situation, which I actually at this point think is the most probable, but I want more data, is that just, this rally was too much too fast. We aren't going to be breaking all the way back down, but we weren't ready just to create a simple higher low and break resistance and be back to all-time highs with a super bullish market. As a matter of fact, we know that the Fed doesn't even want that. So I think that there's a real situation here, and maybe the highest probability situation, where we do lose this low, but it doesn't lead to a full-on resumption of this bear market and these extreme moves that we've had in the past. It kind of just leads to volatility in this area, where maybe we pierce the 21 EMA, maybe we retest this 445 area, we retest this low here from March 23rd, we start to build out more of a wedge type pattern with volatility. They fake the market out on both sides, and they cause pain to both sides of the market. Bulls struggle, they're not getting their continuation, they're trying to add and getting stopped out on stuff, and bears that want that real resumption of the bear market doesn't fully come back in. So those are, I think, our three potential situations after today's close. And I hate to say it, but I almost feel like in order of probability, I think that the situation of building out a wedge, maybe losing Friday's low, but piercing the 21 EMA and snapping back and not just going straight down is the highest probability. And I would actually think, I almost think that the second highest probability would actually be a real break lower. And the lowest probability at this point is that we just get a very fast snap right back up and we're above 460 in the SPYs. But we'll see. We definitely need more data, more information. The technicals got to give us more. But we know for sure that today was not a good day. And we were really right again as a team in some ways this morning. I guess the way in which we were wrong is I don't think anyone was looking for the market to be as weak as it was today. But we were really right in terms of what we wanted to focus on. So, I thought that the Qs needed a break. I did not like the idea of buying tech today. I did not like the idea of buying growth today. I definitely got that message across in the morning meeting. I thought that today could be a real rotation back into energy. And these energy stocks, honestly, some things today looked so good this morning. So good this morning. And then the market just kind of got to them. So we were really talking about these energy and material stocks again for today. I thought that this XLE was finally setting up really well to break up. Like I've discussed on a couple of occasions, I had originally been looking for the energy stocks to have a much bigger breakdown, particularly on this day. But they got bought right back up, which just shows you the underlying strength. Building out this ascending wedge here for the XLE. $78 is the very clear, important resistance level that we're looking for continuation on. Took a rest day yesterday as money rotated into growth and tech. But now I thought that growth and tech were going to rest and that energy could go. And we got this good-looking inside. Man, losing my voice. We got this good-looking inside day yesterday, setting up to the tipping point kind of the tightness of this triangle. So I really liked the idea of buying XLE above 77.81 to be the catalyst that gives us a break above and a close above $78 in the XLE, along with a whole bunch of other oil companies today. And they just they failed, but they tried. Like this opening price action, man, these things looked, most of them, not all of them, most of them looked so good early. XLE breaking that high, being the catalyst that breaks $78. Opening volume here is looking fantastic. Fine, it gets extended, it gives a shooting star. What does that mean? It means a technical pullback to equilibrium. It was right on this candle here that I was talking into the VTF about a new buy or a new add or something like that, versus this little low that I was trying to put in of 77.88 cents. I think I was calling out the buy like at $78 off of that. It was only 13 cents risk. You got a pop to 78.14, maybe, just maybe, if your execution was good, it's enough to get you your risk covered. Honestly, most likely not. Most likely, most of us who were looking to buy here needed a little bit more on this to be able to take a little bit off the table and cover the risk. But this was looking so good with this bull pattern that was building out, with the relative strength, with the market started to deteriorate, and then this was the candle here that changed everything at 10:05. I had pointed out that, so the IWM gave this fantastic opening move, but gave 100% retracement of it. So I said, I don't think we can buy the IWM at this point. It should never have given 100% retracement of the opening momentum move. It looks like it's kind of done and broken for the day. There's a very low probability of a new high coming in. The Qs were relatively weak to begin with, and were grinding lower, but that was kind of expected. A little mean reversion today with the NASDAQ resting and XLE catching up. And again, your XLE is looking good, but then it was this 10:05 candle here, whether you're looking at the SPYs, just wrecks it all the way down to new lows, or you're looking at the Qs, which was an acceleration of the weakness that it was already having, or the IWM, which was so terrible looking. This was so gross. Opening momentum move, 100% retracement, definitely not good. But then, man, this acceleration here, the IWM got so extended. And honestly, just this was your opportunity to start looking for shorts, honestly thinking to this candle, which I don't think you're really chasing price here. You were just able to recognize, we were all able to recognize very quickly here at 10:05, something was wrong. Something was just wrong. You know, even SPYs, which were trying to lead, they broke higher. I was like, oh, I didn't like this tail here on this higher volume on this candle. Okay, but I wasn't expecting this to be the next candle. But once that was happening, it was really telling you that something was wrong. Qs then kind of started building out this bear flag pattern that you could have shorted. You might have gotten stopped out of that into this high. But this area here, or shorting versus this high, I always talk to you guys about the importance of negative high volume Maribozus. And that's exactly what this is. This is a high volume negative Maribozu. And the opposite side of it's always really important. You know, should it be negated, then it would be the bulls telling you it's all clear. But while it's not negated, it's telling you the market's guilty. And you could choose to be looking to be short versus that high. And I don't know if I would take that trade if I was flat, like I had no other positions on. But if you got a whole bunch of longs on, like I do still, that's a great opportunity to say, okay, something's wrong here. Let me just whack some TQQQ. Let me just whack some UPRO or something like that so I can hedge myself out a little bit, at least on a smaller time frame, because something's wrong. And I failed to do that. I feel like that was the one mistake I made today. And that's exactly then what also caused these energy stocks to fail, was the market. Look at the 10:05 candle here for the XLE breaking this opening low when, you know, things were initially looking so good. So I had like just oil stock after oil stock after oil stock on my list today. I had Chevron on the list for the break of yesterday's high. This was actually the best one for a while here. It was very strong on the opening. That 10:05 candle was nowhere near breaking the opening low. It was really trying to hold up, but then eventually the market weakness you know, really caused that one to unfortunately fail as well. Halliburton was the one that I was trading. I know that this isn't everyone's favorite stock in the space, but the chart here was just so juicy. Ascending flag into very clear ascending triangle into very clear $39 resistance. Inside day high yesterday's $38.99, setting up so perfect. It's set to open up literally like at $39. There was a weird downtick right at the open on this thing that did cause me to have to risk a little bit more than I wanted to. I was given some to 75 cents, which you can't actually see on the chart here, but that was the pre-market low, and it kind of felt like this was just a weird market anomaly. So I used two outs. I used 75 cents as an out, and I used the opening low as the out. Luckily, I got enough of a move here to be able to get my risk covered, which I think that almost all of these gave enough of a move for risk coverage. And then, you know, the market just caused this one to totally fail. Even here, you know, at 10:05, 10 o'clock, it's like kind of holding up, and then that one, you know, just you know what it did. I almost said a bad word. I'm not allowed to say bad words on the VTF. So Halliburton was on my list today. XLE was on the list today. Chevron was on the list today. ExxonMobil was on the list today for the break of yesterday's high. You know, Chevron and ExxonMobil have not been my favorite names here, but the setup was also really here with this wedge, with the inside day, with the opening relative strength, with the volume confirmation. Like, this thing just looks so good, and you had to be fast to execute these. But you could have executed this ExxonMobil here for 20 cents worth of risk, and then that was just, you know, phenomenal momentum came in here. You're looking at it moved, you know, you're buying 83.70 or so. Within 5 minutes, you're above $85, and then this thing also, you're just 100% retracement on that. In line with the energy stocks, we're looking at some of these material names, particularly CLF. CLF here was Josh's favorite idea of the morning meeting. Pre-market. I had it on my list as well. I didn't end up getting involved in this one, but I thought it looked great. This is also just a fantastic pattern, relative strength. Company that we've been following along here for a while with the team. With this, I love when you get this inside bar as the ADMA caught up at the end of like a bull pennant like this. So above yesterday's high in CLF. And this was another one. look at this opening move here. Like you could have gotten in this for such little risk, to be honest with you. You just buy this thing right above yesterday's high, right as the market's opening. You use yesterday's low as your stop loss. Maybe give it a little bit more space down to 32.50, something like that. And the follow through on a risk reward basis on this thing, easily you're in this thing for somewhere between 5 and 15 cents risk to get this move up to $34 and just pure momentum. You're over $1 in the money in 15 minutes. And then even when the market pulls back at 10.05, this thing just pulls back to the 21 EMA, still well above the opening low, looking great. Just please give us a little market help. Like, you don't even need, I think, for some of these names here that we're looking at today, you don't even need the market to be going up to make money on these. You just need the market to not do what it did, which is get absolutely trashed. Because then eventually this one rolled over and failed as well. You know, very different stock, but you know, even Facebook that we've been looking at and somehow we didn't get pushed out of, has very relatively strong again today compared to the NASDAQ, right? Your Qs are breaking yesterday's low. Facebook is nowhere even close to it. You would think, like Brant was saying, that if the market just didn't get trashed today, this Facebook easily would have been above 240. So just, I really think that we had ourselves in the right thought process, the right mentality this morning. Oh yeah, the uranium names was another one. Right thought process, right mentality this morning, looking at the right stuff, knew exactly where the relative strength was going to come in, got these great opening momentum moves. Pretty much every one of those, if your execution was decent, you shouldn't have lost money in it. But it's just disappointing when, you know, for anybody who took that CLF, and I know a bunch of you guys took that CLF early and had great execution on it. It's just really disappointing to be able to get CLF maybe for 15 cents risk here, get over $1 move, just like, oh my God, this thing looks amazing, just for the market to throw a monkey wrench in it and new lows to eventually come in by the close. So it is what it is. That's the market, that's trading. You know, all we can do is put ourselves in the position to be consistently profitable over time, and this is exactly how you do it. You know, if anybody who was involved in any of these trades that just went over that gave these opening momentum moves, as long as you didn't chase price, as long as you followed your game plan, as long as you weren't too risky with your game plan, you made sure you got your risk covered, even if you made nothing in these things, because you were super greedy, you probably really did the right thing. So that's all I got for you guys today, and I am happy to take a look at whatever you guys got. Any questions you guys got? First thing from Chinggis, in the inside and up down setup, what if the price action broke the inside candle in the pre-market? Does that setup still hold? Yeah, so usually what we'll do in that situation when, you know, things are gapping above the area that you want to buy is then you turn and you use the spot that you originally wanted to buy as your stop loss. So whatever, your breakout level or your inside candle that you're looking to buy the break of inside day is $20. Stock opens up at $20.20. Instead of buying through $20 versus either an ignition bar low or an opening low or a pivot low on the intraday basis, you're buying off the open versus $20 versus the area that you wanted to buy. That's like what we went over yesterday with like that SunPower, right? Like SunPower was maybe the trade of the day yesterday, $22 I think was the spot that we wanted to be long through. It opened above it, so you just buy versus $22, and that's that. From Gabriel, in days like this, when a move up fails, what is the first signal to start shorting? For instance, in those instances where a failed move up comes a fast move down in the opposite direction, maybe the IWM when it fails to catch up. Yeah, so I don't think, you know, kind of like I was saying, first of all, I don't think if I was flat today, I don't think I would have been rushing to short at this point because we're still above like Friday's key technical level, even as the market was breaking down. We do know that when you get an opening momentum move like you had in the IWM today that gives a 100% retracement as making new lows, we do know that this is now a very low probability that new highs come in on the day. So that means to me, don't come in and buy the IWM, but it doesn't necessarily mean come in and short it. It could just be that we're going to just have a choppy day today, which easily could have happened after yesterday's strength for the market to just chop around, not give a real move in either direction, and that would actually be bullish by tomorrow because it would help set things up again after so many things went yesterday. So I don't think that is an automatic short in that area. I think what was really telling, like I was saying before, was just this high volume Maribozu that really came in here. You can see it very clearly in the SPYs. To put a short on versus that high volume Maribozu, specifically if you've got longs on. I don't love it as much, to be totally honest with you, because I guess there was some news that was kind of hitting the wires a little bit at that point, but it didn't seem so significant to me that we'd be breaking all the way back down. It wasn't anything new that we haven't seen, over the course of the last couple of weeks when the market was super strong. It was just taking bad news more in stride. But if you got longs on and you see this coming in, this is definitely a warning signal that something is wrong. So whereas I don't like the idea of just shorting SPYs at 455 with a stop loss at 457 just because of this candle and risking $2 here, it kind of goes back to the way I was hedging myself when the market was getting too extended those other days, where you know what, this is telling me something's wrong. I got longs on. I got to continue to follow my game plan in my longs. But you know what? Let me just whack some of the indices to the short side here a little bit off of this warning candle versus this high, so that at least I'm hedged out a little bit if this is a real warning signal and the market works its way down. And then it's like an insurance policy. And if it doesn't, and somehow during the day today we work our way up and we negate this negative Maribozu, which to me seems pretty unlikely even as it was happening, well then you lose a little bit of your insurance money, but at least your house didn't get flooded. So I hope that helps. You guys are funny. Scrolling through here. Yeah, API inventory tomorrow. Yeah, so we're going to have an event that should move crude tomorrow at 10:30, so we'll pay attention to that. Jerry bringing up ARRY. Oh, is this doing something here after hours? Yeah, it looks like it. Something going on here after hours with that. Leon Cooperman says there's a chance of a recession in 2023. Okay, Leon. For Terry asking me to look at BEEM. What is this company again? I know I've looked at it. Beam Global. I don't remember what it does. Oh, wow. Look at that move the last 4 days, even continuing today. I don't know what the situation is with this. Up 9% today, even though it was already extended. So something's going on. I don't know what the news is. I don't know what the situation is. Volume increased. I mean, the thing looks great. Your only issue is the upside extension. So if you got a good price in it, I would not like, even though it gave a great move today, I would not like the idea of having bought this today, or honestly even having bought it yesterday. I don't like buying day 3. I don't like buying day 4. But if you've got this from a better price, it looks solid. You need to expect it to pull back at some point, I think. Maybe even starting tomorrow because the volume picked up today. But if you've got a good price, maybe sell a little bit here, even after the market closed here, just to lock it in, because you're probably going to get that price pullback. And I would say if you're long from a good price, like if your price is $18 in this, which is a nice breakout spot, and usually could be long from there, I would say book a little bit, but also endure the pullback on some, and then look to re-enter what you sell at these prices into like the 2250 area, which is still a little bit extended at that point, even with a pullback. But then you can keep the kind of cash flow difference. So definitely a good one. From Matt, Halliburton sounds great into the print. I'm worried it's a crowded long into the print. Fundamentals solid. Less rush or risk than SLB. Yeah, this SLB slob here has just not been on my radar at all because the technicals just haven't been right on this thing compared to a lot of the other oil names, I don't think. Why are the technicals not right in it? Probably for the exact same fundamental reasons that you're providing right now, that the stock is just off. Because more rush or risk or whatever. But yeah, this one's been consistently sloppy, so it was not on my radar. Yep, Josh totally nailed that CLF. Just too bad the market kind of thwarted it. From Rachel, Pat mentioned that you re-enter many of your trades every day. Do you have any time-saving tips for how to do this efficiently? Most of my trades are medium-term swing, and I find myself spending a lot of time re-entering trades every morning. I don't fully understand your question, Rachel. I saw a little bit in the chat, but I was being distracted by something. You talking to Pat about good till cancel orders or something like that. I know that it's a little bit annoying to have to put your orders in every morning, but I do it. I put in off my swing positions that I usually have on. It's not unusual for me to put in 100 to 200 orders a day. There is a way, and Derrick N, if he's listening, provided me the information on how to do it. I still don't do it, but I probably should. There is a way that you can upload orders into an Excel spreadsheet and have them get populated into Lightspeed in your morning. I don't exactly know how to do that. He's provided me the instructions, and maybe he could provide you those instructions as well. But I don't know if you're as active as me. I literally put in 100 to 200 limit orders every morning in, based on the swings that I already have, and I do it extremely fast. I can put in an order a second basically with my hotkeys. So part of it's just getting used to it. The one thing that is definitely annoying as heck and gets me super frustrated sometimes is if I'm flirting with my lockout, and my lockout cancels all my open ad risk orders. And it was happening to me for a little bit at one point today. My lockout's at, I think I'm allowed to provide this information. Hopefully it's not a compliance violation. My lockout's at $10,000. And at one point today I was negative like $10,200, and then I was negative $9,800, and I was trying to get my orders back in, and then I was negative $10,200, they all got canceled, and then I was back under it, and I was getting all my orders in. That probably happened like 5 times today. It was a little bit frustrating. That's like the one annoying time, and I think that you were mentioning something like that to Pat as well. But outside of that, I mean, you can try to do what Derrick N does if you can learn how to do it with the Excel spreadsheet situation. But I just get used to your hotkeys. I can literally put in an order a second, like I said. I can put in orders so fast that sometimes I have to be careful because the system actually gets mad at you if you get, I don't remember what it is. If you put in like 100 and something orders in under 60 seconds, like you're just banging them out, then the system will make it so that you can't put in new orders for, I think, like a 1 or 2 minute period. So I actually got to be a little bit careful because I can sometimes be so fast at putting in orders that I do more than 100 orders in a minute or whatever it is, and then the system's mad at me and won't let me put in any new orders for like that 1 or 2 minute lock period that it actually does. I doubt any of you have ever actually experienced that. You got to be super fast and putting in a boatload of orders at once. But I really think it's just practice. So I hope that helps. From Chinggis, clarification on my previous question. 22 is a breakout level. What is today's candle? What if today's candle traded at 22.01 during the pre-market, but then when it opened at 21.99? Does that affect the price action? Broke the inside candle during the no, you're overcomplicating this, Chinggis. I don't really care that much about the pre-market price action. I mean, I do, and I pay attention to it, and I sometimes buy things pre-market for sure, but I'm not. You're overthinking this on the stock was above the level pre-market, it's below the level when it's opening, it's below the level pre-market, it's above the level when it's opening. You're overthinking this. If your level's $22, it opens above $22, opens above $22. I don't care what the pre-market. You buy versus the level. If it opens below the level, you buy through the level versus some sort of intraday stop loss. And it doesn't matter that it traded a little bit above it pre-market. Matt letting us know that Stifle just gave Oxy a buy rating. Interesting. ARRY is on earnings. Okay. Acting pretty strong here after hours. From Terry. Seeing safety names rising, BMY, PG, etc. catching bids along with Barry, TF's rallying. Seems like there was more downside to come. Yeah, that's what it looks to me like as well, Terry, and that's kind of what I was trying to get across in my portion of the meeting, and there was some chatter in the VTF as well about it. To me, it seems very likely after today's price action that the market tomorrow, or at least at some point this week, is going to lose this key pivot low from Friday that we're talking about. So I do think that we are going to see some more downside price action. It's just a matter of what type of follow through do we see on that. You know, do we see like the real bear follow through, or do we see just, you know, a deeper pivot because the initial up move was so big and we build out like a wedge type pattern type of situation. So I agree with you. I definitely agree with you. From Paul here, when you cover your 1-to-1 and look to add back, I don't look to add back on 1-to-1 on the stock that I sold at 1-to-1. Let me start by saying that. Which I think I went over that recently, but I'm happy to do it again. Look to add back. Do you look to add back everything you sold or just the smaller piece? Also, do you keep the same stop loss on the add back or use the pivot on the add back? Sure. So first of all, let's just make some simple numbers here. I got 1,000 shares of a stock. I sell 500 shares at 1-to-1 to get my risk covered. I'm not rebuying any of those 500 shares. I'm not adding back any of those 500 shares that I sold. The whole purpose of that initial sale of that first 500 shares is to make it so that I'm in a win-win situation where my maximum loss is 0. If I add that stock back, all of a sudden now, even if I did it at a better price than what I just sold from, but I'm not in that same win-win situation, I potentially have risk on. It's less risk than maybe I initially had when I first bought, but there's still a chance here that I'm now turning a trade that was a 0 into a loser. And I don't want to turn winners into losers. I don't want to turn zeros into losers. Where I do that is on that next 500 shares. So I bought 1,000 shares, I sell 500 shares, I get my risk covered. Now I got 500 shares left. And maybe I'm getting one of these great momentum rips like we had today, where things are just super, super extended. And I'm 5-to-1 in the money on my risk on my initial buy in 10 minutes. Easily that happened in CLF and some of these names today. And I say, you know what, things are really extended here. I'm up big on this. I'm going to sell another 100 shares and just, you know, lock that in. And now maybe, because it was extended, it pulls back into that technical equilibrium zone, and I rebuy that 100 shares, and I keep the difference as cash flow. And I still use my original stop, not a new stop. It's not a new trade. Like an add is a new trade where you need a new stop. An add back is not. It's just a resumption of the same trade that you already had. So I'm going back to my original stop loss. And now, if I do get stopped out, yeah, you know, my P&L is going to be positive, even though it's a failed trade. So I will be better than just break even at that point because I was able to do it. My P&L won't be as good as if I didn't buy that 100 shares back at equilibrium, but it won't be as bad as if I, you know, held the entire 500 shares the entire way. And the intermediate situation, though, which makes this beneficial, is most of the time if you caught that CLF like that today, just using that as an example, and it got super extended up there, and you know, and again, this is obviously we're just doing a hypothetical here, but if you bought that 1,000 shares here, you sell 500 shares super early to get 1-to-1, oh my God, it's so extended, let me take another 100 shares off here into $34, whatever, and now it pulls back into the ADMA, you take that 100 shares back, maybe now into the snapback, you're selling it again, and then eventually when you get stopped out of this thing, the fact that you were able to buy and sell twice is even better than having, you know, just sold the one time and it comes all the way back down and fails. So it's really all just about math and probability. This great of an opening move like this, your probability of full failure here like it did is actually pretty low. But, you know, market. You guys hear me say all the time, it doesn't matter how relatively strong your stock or sector is, if the entire market gets whacked, it eventually takes everything down with it. So that's why this trade is a failed trade at the end of the day. This is a failed trade. despite how good it was initially. But if this thing held up and ranges out all day and the market wasn't as bearish as it was, but still was applying some pressure, and you're able to, sell it 100 shares, rebuy it, sell it again, rebuy it, sell it again, rebuy it, sell it again, you do that 5 times, then the thing closes well, you're keeping it as a swing trade, you made all the cash flow difference, you still have a good core position of 400 shares of the original 1,000, you still got 40% of your position that you're now going to be swinging overnight, something like that. That's like a lot of what I'm trying to do in that situation on different time frames. So I hope that helps. Interesting for Matt saying that Matt thinks that Halliburton will have a beat on earnings, but it won't get bought on it. And it's interesting that you say that, because we do, I see that happen all the time when stocks have very big moves into those earnings reports, where just so much of it gets baked in that it can't actually go. Cool. And you'd rather own P10 or LBRT? Yeah, P10, I don't like that failure above 16, but I'm going to put an alert out right now for 16 because it's such an important level and I want to be able to keep an eye out for it. LBRT. Yeah, this one too for 1550. So we got a failure on this 1550, but I think that level is still in play. 1550 on a closing basis, $16 on an absolute basis. I'm going to put an alert out for this one too. Looks like the volume on it's cool. From Steve, Tesla held above the 8 EMA on the daily on a weekday, but it's still a little bit extended. What are the technicals saying? Seems pretty bullish. Do I agree? Yeah. So definitely relatively strong. Still above the 8 EMA. You gotta like that it's still above yesterday's low because the Qs were not able to do that. You gotta like that. My concerns though are, even though it didn't break yesterday's low today, I don't feel as confident about the market as I did. So if the Qs and SPYs start breaking Friday's low, this is probably going to lose yesterday, even if it's attempting to hold up better. And then at a certain point, it could become a feedback cycle of selling. You could get into that gap if you lose 1050. So yeah, the relative strength is notable. The relative strength for sure is notable. You really got to watch the market, I think. If this market somehow holds up and doesn't break down further later this week and we don't break Friday's low, which I think is the higher probability situation at this point, then the relative strength of this Tesla could make it a good trade. But you could still run into a feedback cycle of selling, of catch up to the downside if the market stays a little bit weaker and this thing starts losing yesterday's low, and then next thing you know, you could be looking at this thing at 1050 and possibly breaking that gap, and then you got a gap fill. Pull back to $1,000 on some shorter term market weakness could be a good trade though. Like if if the Qs do one of the situations I'm talking about, and SPYs do the same thing where we lose this low, we shoot down, maybe we pierce this 21 EMA and tail back up and create a wedge that way, you might be looking at Tesla freaking people out by breaking this low, losing the 8 EMA, having a feedback cycle of selling, which causes it to break 1050, gets into that gap, and now you're into this gap fill area coming into like $1,000 or a little bit above that, and then maybe that's the weakness technically that you want to look to buy. Yeah, Rachel, I use spreadsheets, to keep track of everything. That's how I'm able to get my orders so fast. And I know exactly where my orders are supposed to be. So it's a pain in the butt, but just got to keep track of your game plans. Well, yeah, I don't know as much about option hotkeys or lack thereof. Rich. Jackie, adding on to Paul's question, when you add back, do you always look to do it when you see another setup, like back to the EMA on CLF, like you were talking about, or you sometimes just place a bit out lower than where you trimmed? I do both. Sometimes I do it like kind of purely based on extension and then the lack of extension to take the stock back. And sometimes I do it purely based on price increments, or purely based on risk-reward increments, something like that, where I just immediately, as soon as I get that sale, I immediately just throw the bid in at 25 cents lower or whatever it is. So I do both. Yeah, I agree with you, Diego. This is going to be an important week. See how these indices are able to hold up. Take a lap. Oh yeah, I do much less after 11 o'clock. Well, so I don't do a lot of new initiation. So if this is a follow-up on Jackie and Paul's questions, I don't do a lot of new initiation on trades after 10:30 really. A lot of what I will do after 10:30 is what we're talking about. These stocks just go into these ranges midday, and I just was able to take off that extra 100 shares of a bigger core, and I just throw that bid out, and I get filled on that bid, I throw the offer right back up, and if we just fall into one of those midday ranges like that, I'm happy just to make cash flow back and forth from it for the entire afternoon. So that most of my midday executions actually are that. Cool. Yep. We'll assess that ARRY tomorrow. Take a look at the price action. All right, gang. 5 o'clock here. I'm going to jump. Disappointing trading session. I think we did well overall. You know, could have done better. Always can do a little bit better. I could have hedged myself a little bit better today. I had a nice red day today, which sucks, but it is what it is. We were once again really on point with what our focus should have been this morning. Those opening momentum trades were fabulous. Just the market got in the way, and that's part of dealing with the game of probabilities, and that's the importance of your layers of probabilities. And we know that the market itself is one of those key layers of probability. So that's it. Have a great night, everybody. See you all tomorrow.